Hey, what's up, everyone? I'm going to be giving a quick update on how the US dollar could be giving some mixed signals against the current bearish chaos that is being presented in the crypto markets and a lot of the instability back and forth that stocks may also be topping, and why we can also be presented with another opportunity that the stock market is not ready to crash just yet. So our current Elliott Wave analysis for the dollar is possibly showing us that we are coming to some kind of resolution for a possible triangle here. Now, speaking from a purely technical analysis perspective, we do have a valid triangle here, and we have the first steps in identifying one. So another way is that we can also possibly extend the triangle and say that our subwave D is also coming a little bit lower, where we're still working in the subwave D before this E wave also completes and resolution, but we do have the first signs of a possible valid triangle being created here. So we also have a lot of fundamentals looming against us. I don't want to get too deep into it, but I do explain it from time to time in my live streams. I do have a pretty firm grasp on overall global finance and economics. I do have a major in international relations as well, so fun fact. But if credibility is one thing, that may be one thing to consider. So again, a few things that just quickly come up at the top of my mind, of course, is, how monetary policy and inflation will be playing a role going forward, such as excessive money printing, where the Fed Reserve engages in excessive quantitative easing, QE. That could lead to hyperinflation, loss of possible confidence from investors, where the Fed's ability to manage inflation is another possibility. But in summary, just overall, the crash of the US dollar could be precipitated by a combination of monetary and fiscal management, geopolitical shifts, the war that's happening around the world, persistent trade imbalances, a lot of political instability happening. We have an election coming up as well, external economic shocks, speculative financial actions from the Fed. All of these interplay, and these factors could lead to a significant loss in confidence in the dollar, causing its value to drop pretty sharply. But on that alone, it's impossible to really discuss right now because it's such a deep topic. But what we can discuss is the possibility of this current range that we're creating from a technical analysis perspective, and that is a possible B-wave triangle, which is an A, B, C, D, E because of this current range. Now, we originally anticipated the last time I did my update on the dollar was a possible flat being created here before we came down. But it seems like the dollar is kind of struggling and creating some higher highs and higher lows being created here within this triangle. So these higher lows is still showing us a little bit of struggle to break above these regions here to give the dollar a little bit more strength before a downfall. But what that does help create is a possible contracting looking triangle here that could be completing our wave B as a triangle, and we'd be looking for a final wave move to the downside as a C wave. Now, our first wave A, again, is going to be a 5-wave move because our overall move to the downside is going to be simplified as a zigzag, and that's kind of our idealized scenario here. So we need a 5, 3, and then another 5. So what we're going to be looking for in a resolution here is a 5-wave move down for this wave C to be completed. So we're looking for an impulse wave in the fashion of a 5-wave move that'll help complete the move to the downside to bring us down possibly below 190 points of the dollar. So if we're looking for that, we also need to make sure that our wave A is completed as a 5-wave move. So what we have here in the intermediate degree in orange is that we have a 1, 2, an extended wave 3. We have a pretty good firm look on this as being a 5-wave move. And then we have another ranging here that has completed as a triangle, and that move alone is going to be the wave 4. That brings us down to the final impulsive wave for wave 5 of this wave A. So that completes our wave A. And now, since we're looking for a wave B, this wave B is now ranging, and that's the key macro perspective that we're looking for in terms of the identifiable Elliott wave patterns. And the current Elliott wave pattern that I can see right now is a possible triangle. Again, this triangle can be extended a bit since we are still technically working within a possible triangle where wave D is being created. This could be an A, B, C to the downside, and then we have our subwave E either as a truncation below the trend line or right at the trend line, as long as it doesn't pertain or go above the wave C of the previous degree. Then we're going to be looking for still another possible downside, eventually giving us a resolution for a wave C, or at least that's the expectation with the current counts given. So if that's the case, right now we have two options, and two of them are still presenting high probability opportunities that the stock market may be still possibly in a highly hot market that may be seeing a little bit of more push to the upside. And if this happens, this can also give cryptocurrency markets a little bit of an opportunity to possibly create that finalized wave 4, 3, 4. If you haven't seen my previous video on how that ABC for the wave 4 could be completed, and my thesis on why we're still in a bull market could be also intertwining with this idea of how the dollar is also ready for more downside. And we're already seeing, a week straight of just red candles. So that's giving us a little bit of signals, or mixed signals at the very least, and we can speculate on why, or actually be skeptical on why this is all looking a little bit off in terms of the play and the timing. So if the timing starts to come into play or action for how this B wave could be concluding, we could be looking for a pretty severe drop for the dollar that gives us at least a potential target of a 1-to-1 that will give us that equality for that wave C against this wave A, that we'll see a possible move all the way down to at least the $100 region or 100-point region, where we're going to retest this, and then we'll see if it can create the equality down in the lower sub 90 levels for the dollar. So hopefully that was helpful. That was a quick update on the dollar. I will see you guys in the next video, and I will thank you very much. Goodbye.